Hello and welcome. Well, there's seldom that I am actually really honored to have two people on the panel to question and to pick their brains. These are two people that I think all of us here, we have students from all over the country, St. Stephen's, Delhi School of Economics, LSR, all the top colleges, admire also. It's the RBI Governor, Mr. Raghuram Rajan. Thank you very much for being with us. And his friend, and who doesn't always agree with him, Arvind Subramanian, the Chief Economic Advisor of India. Round of applause for these two. I must say, I don't normally say this, but it is honestly great to have two great professionals respected around the world looking at running the economy of this country. The fact that it's in a mess is not your fault. It's not in a mess, but do you always agree with each other on everything? You're friends, but it's like church and state.
No, we do disagree.
You do disagree?
Yeah, absolutely. Absolutely. On economic policy.
Yeah. And sometimes even violently.
But in this largest scheme of things,
Yeah.
not about current policy or
Right.
Yeah.
broadly about way to growth in the long run and stuff like that.
Yeah.
And if two co-authors don't violently disagree on occasion, I think the output is much the lesser for it.
We used to call it when we were on dialectics, and you progress through dialectics,
Exactly.
right? So in fact, actually, you've written quite a major paper together when you were in the IMF, which caused a lot of controversy, and it was his fault, right?
Yeah, he wrote the paper.
Now you're disowning it.
No, it's a very good paper, and
You're co-authors though, right?
we're co-authors. We sort of wrote it together, but he did the bulk of the thinking and the work. But it was, the story is it was on aid and how aid really doesn't work in terms of economic growth. Yeah, it's useful in a calamity and so on, but somehow for all the money that's poured in as aid, you really don't see strong evidence that it helps economic growth.
Right. That's
So-
pretty controversial when you're in the IMF
Well-
giving aid.
No,
It's pretty controversial when in the IMF,
it was worse.
1 week before the Gleneagles Summit,
Yeah.
when all the rich countries in the world are getting together
To ramp
and
up.
being pushed to ramp up aid.
And actually, the interesting story was that exactly the week before, I don't think Raghu remembers. Firstly, he's being very modest when he says it was a joint effort. And so exactly 4 or 5 days before this major summit, 2005 Gleneagles, the front page of the Financial Times, which is what everyone reads in Washington, right? The front page said, IMF says aid does not work. And Raghu doesn't remember this. He had actually left.
I remember that.
He had gone off on tour. And so the managing director summoned the authors, but one of them was missing. And then,
That's lucky.
so I had to go up and face the music.
I think some 15 finance ministers from African countries called him that day
that day.
to say, what are you
guys
saying?
Yeah.
The truth is the articles reflected our views carefully, but this is something that people should know. The headlines are not written by the person who interviews you.
No,
The
that's right.
headlines are written by some
Copy editor.
assistant editor who wants to make it look good.
Right.
And so
Pranoy should know. I mean,
Yeah. I've always said never trust journalists.
the headlines weren't quite that, but you got the gist. We wouldn't have put it as starkly.
And you nearly got the sack, the two of you?
Well, let's say we had some interesting conversations.
actually, I had to go and do a press conference to almost intellectually disown the paper. No, but which I didn't. But I think we had to distance the IMF, the institution,
Right.
from the authors. And it's always a tough act to do because, after all, Raghu was the chief economist of the IMF.
bit
and
difficult.
it's a bit difficult to say that.
But the truth is actually the IMF management supported it. They had seen the paper and they actually said this was right, and we had to figure out a way to the issue was the timing.
The timing.
Perfect
timing from a journalist point of view.
And actually, thinking about it now, it's 10 years exactly since we wrote that paper, and you know, I don't know whether I think it's broadly it's going to survive. Hopefully, I don't know. But the really reassuring and comforting thing was that the World Bank commissioned a report by experts on an evaluation of research done by the World Bank. Right. And Angus Deaton was on that committee. Right. And then he, I think, said basically that one of the, he said the best paper done on aid was this paper that Raghu and I did. And he still stands by it and he teaches it in his class. So that's the vindication for that paper, for whatever it's worth. I mean.
That's not bad at all, but there you both agreed on one thing. Now, it's normal when you've got two economists, you'll have 20 views, right? And if you're Bengali economists, there'll be 50 views. By and large, neither of you Bengali. Right?
No. Actually, we're both from the same part of the world.
Right, exactly. So let's, one area which there's been some, I'm not sure who believes in what, but there's some, I have a query in my mind about, do we have inflation or do we have disinflation or deflation? And it just depends on which data you look at. Let's have a look at how bizarre the two indices, the wholesale price index and the consumer price index. It's a crazy divergence. The wholesale price index says we have a minus 5% inflation or deflation, and or disinflation, and the consumer price index says we have plus 5%. Now, only India can have two indices that say exactly the opposite thing. And you believe in the WPI and you believe in the CPI.
No, I think that's not.
By the one last thing,
yeah.
The GDP deflator is about zero, halfway.
Halfway to that.
It's like exactly if you average the two.
But that's almost by construction. So the real, what the National Income Accounts Office, which by the way they do a fantastic job in terms of procedure and institutions and credibility and so on. It's really a top class operation, and they're trying to upgrade it to world class standards. They actually only measure wholesale and consumer prices. The GDP deflator is just constructed.
Derivative.
Yeah, but I think that. On this, it's not that, first of all, it is very striking. It's not completely unprecedented, but the magnitude is unprecedented. Yeah. It's happened on a couple of occasions before. Right. And I think that it actually creates a very difficult problem for Raghu and the RBI.
Yes, because they both suggest very different policy prescriptions.
And just for the record, you know, it's not that I believe in WPI and Raghu believes CPI. I think we both believe, probably, and Raghu, correct me if I'm wrong, that both are conveying information about the economy. And the question is, therefore, how do you from this take out what's essential and then, you know, set interest rates or monetary policy, you know, given this bewildering, you know, divergence in information that's coming through.
One example, that if you take the CPI as the authentic measure of inflation, you are worried about inflation then. So you will not lower interest rates. If you think WPI is authentic, you will lower interest rates. You're not worried about inflation. Right. So a huge impact on policy.
Right. No, so we moved to targeting CPI some time back. And I think that's the right thing because that's what people see.
Right.
So what explains the divergence? I think it's basically differences in baskets.
Yes.
The WPI has a lot of traded goods, a lot of commodities, which are declining in price, and therefore it's negative. The CPI has services and food, you know, held down by global prices, but services are unique in India. You can't get education services abroad, you have to get them in India. You can't get healthcare abroad, you have to get it in India. So those have been inflating at a higher pace. So the difference really, I think, is the difference between non-traded goods, which are a larger part of CPI, and a smaller part of WPI.
In a nutshell, what you're saying is that CPI, Consumer Price Index, has about 45, almost 50% food items, food and beverages, while the wholesale price index has 65% manufactured items. So one is almost for industry and one is almost for the consumer.
Absolutely.
Right?
Yeah, but I think, I mean,
so why, sorry, just one last thing. Why go for CPI when it's all about food and nothing the RBI can do much about food, more the monsoon?
Well, it's not just about food. It's also, I mean, this is the thing that has had us worried and has us worried, which is services. But what's important is, think of the wage price inflation issue. If we believe that people seeing the basket of goods they have to buy, see that basket higher in price, they want to have higher wages to be able to afford that.
Right.
So the spiral is not about commodities which some firm buys,
Right.
but it's about what you go out into the market and buy.
Right.
That's what we have to combat as an inflation-focused central bank.
Right.
One. Two, it is an issue that manufacturers might face a different level of inflation. But remember, it's not the -5 that you're pointing to,
Right.
because even though their output prices are not going up that much or may even be falling, the input prices, which are commodities, are falling even faster.
Yeah.
So their profits are actually increasing.
Right.
So if you look at what they're trying to discount when they look at whether I should invest, it's the profitability. And that's, a little better than where the WPI is, probably not as good as the CPI. So that's one. Don't feel that sorry for the producer. He's not as well off, certainly.
I mean, he must be worried that prices are going down because of lack of demand,
Exactly.
kind of recessionary conditions, but that's so important for the RBI.
Exactly. So what we have to do is continuously focus on that CPI, but say, how do we get to that target that we have in mind? Maybe if conditions are weaker, we take a little longer. That's how we set our inflation process. We took 1 year to get from, the initial years were easy. 1 year from double digit to 8, another year from 8 to 6, but now we're going to take 1 year to get to 5, and then another year to get to 4. So it's going to taper off the pace at which we try and hit the target.
So the way I would, I think about
The way
this.
you disagree.
The way Maz, a little bit disagree is that,
I'd love to hear your conversations in your room, actually. That would be much more violent.
I think that firstly, they do convey very different things. And so in some sense, the consumer is facing one set of prices, and the producer, even I think the adjustment that Raghu is saying is right. I mean, his profits are going up, but he is facing, if you're selling steel, for example, your real interest rate is really very, very high today because the output of your steel is just plummeting.
Yes.
And even discounting for the fact that your inputs are cheaper, you're really hurting. So how should one, digest all this information for, conduct monetary policy? And I think that, I think Raghu is right that, you've committed to the CPI. It's something that, you should think. And by the way, I think that, the way I would defend the CPI, even, and you make a good point, Pranoy, by saying that, so much is goods, what do you control? But actually...
So much is agriculture.
So agriculture, so you don't control it very much.
Right.
But actually, what you do control is, if consumers are looking at this price and they say, should I keep my money in the financial sector in banks or should I put it in this? They look at the CPI. So by adjusting interest rates, you do affect consumer decisions in terms of, which can affect inflation. If they put money in the bank, that's good because inflation will come down, they're saving more. But the way I would, and I've been, we've had this discussion is that, you have this inflation target, but it's a flexible inflation target. It's not that, you have to reach this thing at this point in time. Therefore, what's extra information WPI is conveying some more information about the economy. In this case, as you say, economy is very weak in some senses. Therefore, we should exploit the flexibility to design monetary policy to take account of this extra information.
I mean, that's the point he must be putting to you a lot, that there's recession, that nobody's buying stuff from industry, cars are not, the output is dropping. And you're looking at CPI and saying prices are too high. So
No.
what about
I'm saying if we
jobs
can't
and
bring
growth?
inflation down under these circumstances, then we really will have an inflation problem when things get better. So the point is that, yes, we've given some leeway for the condition of the economy, and clearly we're looking at the conditions of the economy when we determine interest rate policy.
Right.
But the point is, with all these positives behind us, WPI at -5 and so on,
That's a shocker.
we have to be able to bring inflation under control, because over time things will just get tougher if the world economy starts growing, there's inflation elsewhere. The other way of looking at this is, what WPI is saying is the world has controlled inflation, or in fact engendered deflation at -5, right? We can't sort of beat our chest and say, yeah, we did -5, it's all because of us. It's because of the world. What is because of us? That's 6 and 7. That's services. So what we need.
I would say, wouldn't you say that the world has helped us get to -5 and the monsoons made us go +5 in CPI? A bad monsoon will, I mean,
I think food prices over the last year have contributed some.
They're about
but
45% weight. That's quite a lot.
but they've
terms
been
of
very
the actual
contained.
contribution.
Very
Yeah,
contained.
but there too, I mean, I think the combination of the world and the government have helped keep food prices down as well. I think there's
Food
a
management has been very good.
so I think the government should get a lot of credit.
And I've just been on a
Pulses.
long trip on Bihar,
Pulses
and
in
all
India.
everybody is talking about
Yeah.
is dal, and that's affecting inflationary expectations.
Right.
Let's have a look at what inflationary expectations are right now. All this effort, but still we're not able to control inflation expectations. They're rising. Is that the dal effect?
Salient goods, absolutely. When you ask the man on the street, what do you think inflation is? He'll pick a number which, the average number is number we haven't actually touched in terms of inflation over the last 5 years, right?
Yeah.
But really, the number that he or she picks is based on what they bought last, which
Right.
typically are things like, as you said, dal,
Onions.
milk, eggs, onions. So it's salient stuff which stays in their mind, and they say, oh my God, this has gone up so much. Much of what they pick out typically has some fluctuations. They go up, but they also come down.
Yeah.
And they don't really
Yeah.
seem to pick up the down
No,
phase.
no.
But when it's up, it really, really
And by
strikes
the way,
them.
seasonality is huge in these.
Absolutely.
It's a 20% change from the lean months to the harvest months.
I think on the dal effect and hitherto the onion effect, I think it's kind of interesting and I think there is some psychological salience behavior going on, but I think it also connects with the point that you began with, the divergence, because the question is that why is there so much divergence? After all, if wholesale prices are coming down, at some stage you should reflect that also in the ability of that basically means that manufacturers don't have producers don't have a lot of bargaining power, which means that eventually consumer prices should also come down. So it's saying something about the parts of the Indian economy which is kind of a little bit, and there I think it's also saying that in agriculture, like certainly in the case of vegetables and fruits, that we're not a single market, that there are these rigidities of movements across things, therefore shortages at some place get magnified and distorted in another place, which I think we need to address. And I think the dal effect is something that it relates to long-term agricultural policy. How are we going to address the
Actually,
fact
that's
that
an important issue.
Yeah.
Every year something pops up. It's onions, dal, could be tomatoes, could be anything. And we don't seem to be able to control that. It gets out of control, and then it takes us a long time to import. How do we, can't we plan ahead for this sort of thing?
When I said food management is better, one of the things we manage to control is grains. I mean, rice, wheat, and that's partly because of
buffer stocks.
of moderation in minimum support prices. Also because world prices are relatively moderate, we can import. But it's important to control these because these are the things we procure most of.
Right.
So when the farmer is thinking about what to plant, he says, well, this is a sure shot.
Yeah.
I can plant it and I can actually sell it to the government if need be. For the other stuff, we set prices, but we don't procure so much.
Right.
And as a result, there's a greater focus on
risk
this.
attached, yeah.
And the fact that we produce too much of this is reflected in our huge buffer stocks.
Yeah. Unnecessarily big. We don't
Absolutely.
need that kind of buffer
So
stock.
we're moving more towards
We affect cropping pattern
Yeah.
by making it less uncertain to grow wheat or rice, right?
right, and by keeping those moderate,
Right.
but increasing, say, the price of pulses, you give farmers more of an incentive to shift,
Yes.
which in the longer run we really need. In fact, we need market forces to work. What
Right.
does the public want? They should produce more of that.
Yes.
So the way to do that is to keep minimum support prices below the market price. So they're really a support price rather than the market price, which is what they'd become for some.
Right. And to make it across other commodities as well, which you want to encourage.
Yeah, but I think that the way I think about agriculture, and I think there are two distinct policy issues here. I think there's the cropping pattern grains versus proteins. And remember, Angus Deaton has this excellent research which shows that in India, incomes have risen, therefore the demand for protein has risen, and we actually consume much less cereals than we would have had some historical pattern been followed. So protein is going to become, and as vegetarians, pulses are going to become very important.
Right. And
so we need to plan
important,
for that.
yeah.
So the pulses problem relates to prices, to technology, and so on. But then we have this fruit and vegetable problem, which is a slightly different problem. There, it's not this, long run, how do we boost supply kind of thing. It's about how we make India a common market, because, there are states which produce this, but because of restrictions across states, I think it can't, the stuff can't get to markets on time. I like to say in the economic survey, I said that, in agriculture, we're not one, but we're like 5,000 countries, because there are 5,000 agricultural markets.
Can I just ask both of you one excuse which is always made for any individual prices of a commodity going up, which is ridiculous, is that it's the hoarders. I mean, they're blamed, it's not our fault, but shall we just say that's rubbish once and for all?
I'll let the government view.
That answers the question, I think.
No, I think that,
As an economist.
I think the thing to understand is, we have to understand, what leads
How to pass the blame to somebody else.
Well, that's one way of looking at it. I think that, we have to, think about, what information our price is conveying. Yeah. And therefore, if they're conveying that the shortages, that means something, and there are different ways of approaching the problem. And I think that we have to look at we have to look at the long run impacts of these things as well. Yeah.
That's very well put. Okay, any questions on inflation? Anybody who's from Delhi School of Economics and who's a Bengali gets priority. Anybody? No question on inflation. They don't suffer from price rise. They're just way above.
It's history now.
There is
an
a
inflation problem.
There is a question there, yeah.
There is a question? Yes, please go ahead.
It's a well-known fact that inflation now is well under control, but is it still sustainable enough to survive another rate cut if it happens anytime soon?
So this is an indirect way of asking me whether we're going to cut rates.
No. You're not as dumb as I look.
Yeah. What we said in our monetary policy statement is we've essentially looked at all the room we had and taken full advantage. So until more room builds up, and we said we are data dependent, I think we're comfortable with where we are.
I actually have to remind Raghu that he's forgotten his own monetary policy statement, and let me remind him that he also said that the stance of policy is accommodative going forward, which kind of speaks to the question that you asked, that what he's saying is that, that he's open, or the RBI is open to more, so it's not shut out, for good or even for the near term, more interest rate cuts. But he's open, and as the data come along on prices and on, how the economy is doing, he will consider it. But he's basically accommodative, if I may remind you of that, Raghu.
Accommodative, that's a crucial.
Exactly.
I agree with the word accommodative.
I have one suggestion which just occurred to me that we do a lot of sampling and we add samples from different places and we do some econometrics. You can add both the indices together and their weights will automatically be adjusted. You'll get a bigger sample of, so you get food plus manufactured goods. So if you do CPI and WPI together, you may get a better overall picture of inflation.
Maybe, but remember the CPI is based on what the consumer buys, right? Yeah. So if you're really interested in protecting the consumer, right, and thereby, worrying about either his investment decisions or his consumption decisions, I think that the CPI is probably what you should be looking at rather than intermediate prices.
Okay. Another area which is worrying, industry is of course in terrible shape. They're crying out for something, they're not responding, and it is really awful to hear politicians say, come on, do something, get off your backsides, industrialists. Doesn't work like that. They need signals, they need incentives, they're dying to do something. And part of the problem, of course, is the weakest ever that the global economy has been since the crisis. We're growing, the whole economy, global economy is growing at 2.5%. That's very, very weak. So our exports are plummeting. Let's have a look at our exports at the moment. Month after month, exports are going more and more negative. In September, they're minus 24%. And I think both of you again have slightly different views on this. What does this mean about the exchange rate? Is the rupee too high? Let's have a look at how the rupee has fallen against the dollar. But what's more important, has it fallen against other emerging markets? Just have a look at that. Versus South Africa, the rupee has gone up by 30%. Versus Brazil, up by 36%. Versus Russia, up. The rupee has gone up, not gone down, by 49%. How do you compete? Even versus Indonesia, it's up by 7%. Versus Turkey, 19%. Versus Mexico, 13%. Should the rupee be lowered? I hate to use devalued, that's like a hangover from the past, a bad word.
Yeah, but
To make us more competitive.
Yeah, can we go back to the previous chart? I think
Yes.
it's also
The plummeting exports, if
yeah.
we can just have a look at
Can
that.
we have a look? Because I think this is important for this audience, you know, what the headline sensationalism that Prannoy indulges in and what the
What
reality
was the
is.
one they gave for you? A doesn't work.
Yeah. So-
Exports are plummeting.
Exactly. So if you look at this thing, and it looks really, you know, it really looks horrendous, disastrous. But actually, you have to correct for two things in this. Why this is, you know, first of all, this is all exports, and you know, we export a lot of oil-related products as well. So the fact that oil prices have come down, we benefit a
I
lot
can't
of.
believe you're saying that. We used to say we can't devalue because we import so much oil. Now we are exporting oil.
No, because the point I'm making is that, you know, non-oil exports, because we're benefiting from the
Non-oil,
oil,
yeah.
has come down by much less than what this is suggesting.
Okay.
Yeah, it's very important. It's a huge
Right,
correction.
right.
The second thing you have to remember is that, you know, in a sense, just as Raghu said earlier, the world prices are coming down enormously. So that if you were to say what is actually not the value of non-oil imports, but actually in terms of actual volumes, you know, how many cars, how many tons of steel, you know, how many aluminum, whatever ingots are coming in, that number is actually very different. It would be something like,
Coming in, imports you mean?
sorry, going out,
Okay,
yeah.
sorry.
So the export, so the true measure of exports is, you know, much less forbidding than what you're. So that's just a lesson in economics, which for whatever it's worth.
Yeah.
But that being said, it is true that
Still negative, yeah.
the world economy is, and of course, a lot of this
So
is
that's hurting Indian industry.
that's hurting in industry, and therefore the question is, to the extent that it is a problem, and we have to understand how much is beyond our control and how much is within our control, then we have to see what instruments we have.
Right.
And I think we have, you know, a number of instruments. One is that, you know, this is where I think the Make in India, you know, campaign of the Prime Minister is very important, because I read that above all is as how do we make the economy competitive in the medium to long run, because that's fundamentally what's going to get our exports up. Right. That's the medium term.
And price. So
You
the
know,
other thing in your
the
control,
other thing
yes.
I'm going to come to. The other thing, which of course is the knee-jerk short-term reaction, is, oh, let's give favors to, you know, specific exporters. You know, the steel guys are hurting, give them some subsidies, you know, or give them some protection. And I think there we have to be a bit careful. We have to balance the benefits possibly of giving protection against the cost. But I think the last
And the cost would be that you could have industries that use that commodity as an input.
And
you
then-
put tariffs very high, then your car exports fall off because now steel is very costly for the car exporters. So there's a balancing
so
act.
Yes,
that's very.
yes.
But the point about the exchange
And
rate.
targeting individuals
Yeah, yeah,
is a little bit interfering with the market, and you know.
And also it becomes discretionary, and then
Yes.
you know, and you
Yes.
know, it creates all the problems that we know happen with these things. But then the third instrument we have is the exchange rate, and I think that you know, to the extent possible, I think we have to maintain a competitive exchange rate. That's the experience from China and all the East Asian countries that did. But the question is that, you know,
Just to stop you there.
Yeah.
Competitive exchange rate. We're saying our exchange rate is becoming less and less competitive with many other emerging markets. If you look at the overall emerging market index, our exchange rate is becoming more and more non-competitive. So I know it's politically very difficult to say, yes, the rupee should go down to 70, 75, 80. It sounds like it's terrible. But if that keeps us in parity with emerging markets, shouldn't we do what's best?
Yeah, but there, I think, Prannoy, and I think Raghu will respond to this. I think that on the one,
You didn't say agree with
no,
this.
no. On the one hand, I do think that we have to maintain a competitive exchange rate. But I think, how do you get it in the face of, you know, a global economy we're part of, and in the face of all these inflows that are coming in? You know, if we can, by magic, you know, over time, maintain a gradual, you know, improvement in competitiveness, i.e. a gradual depreciation, it would be great. But then, you know, if suddenly markets say, oh my God, you know, this is an economy that's, you know, the exchange rate's coming down, there are all these other problems, let's exit, panic. And then you get these disruptive movements of the exchange rate, which are then very damaging for everything.
Right.
So you have to balance
You
that.
have to balance.
Yeah.
But bottom line, should we try and be competitive with our competitors?
Well, first, I think those numbers again are a little misleading. Partly
Prannoy, you're
because
2
How
for 2
can
today.
numbers be
You're
misleading?
You're 2 for 2 today. I think,
I'm in deep trouble here.
I'll take your nominal differences for granted, but
Right.
remember now Russia has a pretty serious inflation problem.
Yeah.
Because the currency has depreciated so much.
Right.
Similarly, Brazil is combating
Right.
a higher level of, though they started out at a lower level of inflation
Right.
than we did. So what that is doing is offsetting any competitive advantage there.
Right.
And that's a point to
That's a valid
note,
point, yes.
that the industrial countries, because their central banks have credibility, because they don't have as many frictions in the economy, seem to be able to depreciate their currency and get a competitive advantage from that, which is significant. So, you know, the euro area is one example where they seem to be doing better as a result of the fall in the euro. But for emerging markets, there's always the risk that whatever short-term advantage you get is offset by seriously higher inflation over the medium term, which negates everything that you've done. And this was the Italian issue, right?
Right.
Italy used to have this history when it had the lira of doing a sharp depreciation, get an advantage for 6 months, and then see inflation come back
Yes.
and negate
And
that.
then
So
you
they
have
had
to
to
do it again.
continuously depreciate, absolutely. And so then the question is, which do you prefer? Inflation over the medium and the long run, or do you try and do it through all the other means, get competitiveness through the means that Arvind talked about, which is improve your Make in India capabilities, improve your business regulation,
But you know,
your
some of that
infrastructure.
may happen. Didn't they say, somebody say in the long run we're all dead?
no, see,
Just one more thing on that.
the exchange rate.
Jacobs, even if you depreciate today, let's say we got
No,
a 15%.
I think it's what you're saying. I totally agree with, but it's taking an extreme position, take a sharp depreciation. But you know, you're a professional that everybody knows can handle it slowly over time. So should we be slowly under control, just keeping up our competitiveness?
Well, I think so first there another element to competitiveness which is missing here, which is productivity growth.
Right.
So to the extent that we have stronger productivity growth, we can stay with a nominal exchange rate which would otherwise be overvalued. But put everything together, and this goes back to Arvind's other point, that when you look at volume of exports, the volume of exports hasn't fallen off tremendously. And in fact, compared to our peers, everybody's suffering on exports.
Yes.
Compared to our peers, it doesn't look like we are an outlier. So in a broader sense, we are maintaining competitiveness.
So you say our exchange rate is fine as it is, it's the right spot?
That's what I always say. Wherever it is
It's
the right
fine.
place.
You know, or the other way of saying it is that if you ask an industrialist, or you know, is that what is the best level of the exchange rate, he will always say 20% below the current level. You know, so I think because he'll always want to come. But I think
20%
below, yeah, he wants
devalue kind of
devalue,
lower.
exactly, yeah, exactly.
Okay.
But I think that one thing I think we miss out on all this, and I think this is a macroeconomic point that I find it very difficult to get across in India. You know, at all levels. You know, hopefully not at your level, but at all levels, is that when you talk about managing this and how do you get it down to wherever you want to, what complicates that considerably is that we are relatively open to capital. If capital starts flooding in, what is poor Raghu to do? Because when capital comes in, the pressure is for the thing to go up and up and up.
Right.
And remember, our system seems to think that more foreign capital always, at all times, in all forms, is an unambiguous good. But I think at some deep level, there is a tension between saying, let's get all the capital we want and make it India and competitive, because the more it comes in, the more it's going to put the...
It's another paper we wrote together.
Yeah, it was that. And therefore it's a problem. It's not easy, and therefore, we should never forget that.
The kind of vibes I'm getting is that on interest rates, you'd like him to be accommodative, and on exchange rate, he'd like you to be a little accommodative.
But of course, as all of you should say that interest rates and exchange rates are related. It's not. There's no. Yeah, exactly.
I have reported on China, since they used to wear Mao tunics, and the factories were like Russian factories. I used to film them. Then I saw the first golf course, the first McDonald's. They had a big McDonald's, and across the road they had Deng Xiaoping blessing it, and I did a piece to camera.
I see.
And I used to watch the amount of foreign capital that used to come in those days. $80 billion, $100 billion a year. We're nowhere near that. And many people say that added 2-3%.
We're going to say the same thing.
2-3% to their growth rate.
I'll let Raghu say it.
3-4% to their growth rate?
We may not say the same thing, but the way they dealt with that was sending it back out. They built $4 trillion worth of reserves, low-yielding reserves. So this is the Chinese, poor Chinese family, in effect, building assets against industrial countries. Now, how much that extra saving sort of has hurt their longer run consumption prospects. Now, China is interestingly moving in a significant way to enhancing domestic consumption.
Right.
Because it views that as the more stable way of growth.
No, but he didn't say what I was hoping he'd say, and I want to. Is that when you talk about the 80?
He seems pleased that he didn't say what you wanted to.
The 80 billion that came in. All that Raghu was talking about, the pushing out thing. It's happened in the last 10 years. But you go back to 79, the kind of capital that China got was not funny money and speculative capital. No. It was hardcore investments in factories and
Coca-Cola factories,
FDI.
All these kind of, yes,
and
exactly.
FDI is a good thing. But what we're talking about is the other stuff, the borrowing that we do in foreign currency, the speculative capital that comes in. We have to be much more careful. And China, even today, it does not allow these things. I think on allowing these things in, we are much more open than China is.
But this is one place where he and I think, are a little, we differ a little. I am more open to the idea that foreign capital is beneficial, especially in India where risk capital is hard to find. And so, there's a lot more money which has gone into the stock market over the years. Of course, they expect a return, and they should. But they are also providing that equity buffer, which we so desperately need in our companies. Often you find that going to Indian sources for that risk capital is very hard. Most Indian sources want debt. And so I think there is a valuable role that they play. Private equity is playing a valuable role. It's not just FDI, but other forms of foreign capital.
But just to finish this exchange, but Raghu, also remember, in the go-go years of when the infrastructure boom happened, lots of these infrastructure companies borrowed in foreign currency. They took dollar loans, which is, I think there we'd both agree, amongst the forms of capital, that's the most pernicious.
Right.
They got this. So they had borrowings in dollars. They were selling power and everything, which is rupees. When the exchange rate went down, their borrowing costs ballooned, inflated.
And a lot of companies are suffering
from that. Exactly. Even today, we face the hangover of that. So we have to be very careful about what kinds of foreign capital.
But both of you agree that foreign direct investment into factories, into creating assets is unambiguously good, and we're at what, 30-40 billion? And China used to be 20 years ago 80 billion. Yeah, so we should try and raise it from 30-40 billion to 100 billion today?
Yeah, absolutely.
In FDI.
In FDI. FDI
on the exchange rate, there's a question from Nikunj Jain from St. Stephen's. You're there. Okay.
Lal Sitara jeetega.
So my question to you is that today the US Treasury has a lot of debt in the international market in the order of trillions of dollars, and China holds 20% of this. However, it's public knowledge that they cannot back up what they've printed. And they still continue to print this, right? So today, if everybody who holds a dollar note goes to them and asks for it back, and I say everybody, I don't even mean 100%. I mean, they cannot back up half of that. So my question to you is, with so many emerging markets coming up and so many more players on the international level, will we see a paradigm shift from the dollar as an international standard to maybe other currencies which are net exporters or which can actually back up their debt?
You're asking a somewhat philosophical question on what it means to back debt. I mean, technically they can. They just print dollars, and the Federal Reserve has a printing press, and they can print as many dollars as they want to pay down the debt. And that would be legal, because they're paying, what it says is, I will pay you back dollars, because they don't issue in euros, they don't issue in rupees. So that's the value of having a reserve currency. It's also a value we have, because we can issue debt in rupees. And when somebody comes for their money, we print more rupees and give it to them. The key question you're asking is, should people be confident that they won't in some way inflate away their debt because they don't have the resources, the underlying resources, and they're printing money beyond what they can actually produce in a sense? And the answer is, the US does enjoy that confidence today. So it may not be running a current account surplus, but there is certainly no belief in world markets that the US will default on its debt through a high inflation. That's why it's a reserve currency. Of course, if the US fiscal situation went way out of whack, or there was a sense they would never get their entitlements under control. The biggest source of problem for the US long term is that they have obligations on healthcare and social security, not so much the public debt, the pensions so I think that they have to bring that under control. There are many people in the United States who are worrying about that issue. But so long as the world has confidence that someday they will bring that under control, there's no worry about the US defaulting on the debt. As far as other countries go, yes, over time, as their markets become more liquid, as going in and out of the currency becomes easier, they will become more of a reserve currency. We are taking small steps along the way, of course, keeping in mind Arvind's point that we don't need a whole lot of foreign capital coming in today. But, rupee bonds, the so-called masala bonds, can now be issued abroad. We are fairly open to foreign investors coming into our equity markets. We've been a little more cautious about them coming into debt markets. So over time, as we become more confident, as our own domestic markets deepen, we will almost surely become a reserve currency.
Yeah, so on that, it's a great question, by the way. I think that because
it's only because he's from St. Stephen's.
No, because there are many kind of interesting issues that raises. So one of my I've done some work on China, and one of my predictions is that by 2030 the Chinese currency will overtake the dollar as the premier reserve currency. Maybe I'll be wrong on that.
It's always safe to make long-term predictions.
Exactly. Yeah. But I think the interesting question here is that.
Well, that's interesting.
Yeah. China actually really resents the fact that the dollar is the reserve currency of the world, and they're doing everything to try and make their currency also attain that status. But the irony is that in the last 5, 6, 7, 10 years, the period that he was saying, the country that's been most responsible to keeping the dollar as the reserve currency are the Chinese, because they've been buying up all these dollars and propping it up. But the second irony is, of course, that in the world today, by acquiring all these reserves, dollar, in fact, I would say today that China has more dollars to throw around than even the US Federal Reserve, which for all kinds of political reasons, it can't print as much as it would like to for political reasons. But China has been using these $4 trillion to gain a whole lot of geopolitical advantage. Yes. And there are lots of ironies in this. Yeah. Right. And hopefully at some stage we'll also become a reserve currency, but let's wait.
Then you're not saying 2030.
No, not 2030. I don't even want it to be a reserve currency by 2030, because I think that it means that we'll have to open up in a way that may not always be desirable for Make in India, for example.
Just one more thing on the exchange rate. And in the old days, nobody used to say you can't let the rupee slide. I hate the word slide, devalue, become more competitive. Plummet. Because of oil. We import so much. Oil will die. Now oil prices are ridiculously low. And the criticism of the establishment is that you're not making use of the oil dividend, the oil bonanza, that from $120 to $50, and we're an oil importing country, this is the time to just boost industry, make the economy grow faster. We haven't seen no impact.
I think, I don't think it's completely fair to say that. I think, let me say two or three. One is that the fact that oil prices have come down
It's wonderful for us. Right?
No, has allowed us to reduce subsidies, has allowed us to get more tax revenues, which in fact we have used in the budget to divert to public investment. So I think that had oil prices not gone down, maintaining macro stability, a prudent budget deficit, and providing money for public investment, by the way, which is one of the motors of the Indian economy today. I mean, exports are down, private investment is down, but the oil price effect in some ways, and all that the government and the RBI have done, oil prices have come down, it's put more money in people's pockets. So private consumption, it's like a tax cut. So private consumption, urban consumption has gone up.
Has it really? I mean,
Yeah. Well,
the demand doesn't seem to have. So it's a bit.
No, but I think
really
that I think
leverage that tremendous opportunity.
No, but the other thing is that on the fiscal side, we've actually provided more money. In fact, public investment in the first half of the year has grown up by something like 17-18%, and
Okay,
that's kind
I
of.
do have a question on that, which I think, since you're criticizing him on interest rates, he may criticize you on government spending.
Sure.
In a few minutes from now. But overall, the biggest area facing a problem is industry today. I know you look at consumers, but industrialists are kind of like they're a signal, they're the early signs of a reviving economy. Let's have a look at the problems that industry is facing today. And it's really serious in India. First of all, there's signs of a crisis. There's a headline for you. Latest quarter, 2 out of 3 companies missed their sales targets. That is 2 out of 3, almost unprecedented. Growth rate of industry is 5%. I'm talking about China in those days, 18%, 19% industrial growth rate. Extremely poor job creation in the organized sector. Only 64,000 jobs in quarter 1 of 2015. Shockingly low. It shows no way out. Falling exports, we've talked about, maybe 24% is a little too high given inflation differences. Competitiveness, we are now 130 out of 186. We've improved by 10. Wow, man, we've gone from 140 to, you know what, we are in football, I think we're about 120. We're the 120th best footballing country, and we're the 130th most competitive country, and the 56 below us are not very important countries. And then, of course, the high debt that all industry, particularly infrastructure. So industry today is crying. And are we doing enough about it? If we just look quickly at one thing you could do is lower interest rates, of course. The other thing you could do is quantitative easing, more government expenditure. But the data shows the government expenditure has been dropping. Just have a look at the percentage of GDP. The government expenditure, which in a way contributes to slow growth. And by the way, that graph could have been much more. They should learn to draw graphs so it looks as though it's falling faster. From about 17% to 13.5% of GDP. We have haven't met our disinvestment targets this year. We are not, I think the only area which is doing reasonably well is road construction. But government spending to boost the economy, which is your area, not only your area, I mean, there are many ministries, is not boosting the economy. So it's not just interest rates.
So I think you've asked 2 questions. One is on manufacturing, and the other on government.
Yes.
So I don't know how you'd like to take it. So let me talk about the manufacturing side.
Right.
I think it's well identified problem is, but I would see it slightly differently.
Okay.
I think the problem, one of the challenges of the Indian economy today, is that private investment is somewhat weak. And I think there are many reasons for this, but part of the problem is that balance sheets of the private sector are strained. And a
You
big
mean a lot of debt?
a lot of debt, low profitability, yeah, and it seems to be concentrated in a few sectors and in a few groups of companies, and I think that's important to note. So what's happening is that because they have so much debt, because they're weak, they can't invest. And of course, part of the problem is this is partly a legacy from the go-go years of the 2000s, when there was a lot of expectations of high growth. They over-leveraged themselves, and now, in some senses, part of the chickens are coming home to roost. So I think that the challenge is, how do we clean up the balance sheet of the firms, and associated, how we also then clean up the balance sheet of the banks? Because I think unless we solve those twin problems, private investment going forward will remain weak. And so we can talk about that. But then that leads to, therefore, if private investment is going to remain weak, how much should the government do to offset that? So,
What should he do? Wake up and do something.
I think the government is.
He's telling you to lower interest rates and boost industry. What should
Well,
we be telling him?
I think the government said it was going to do more spending, and certainly in the road sector has picked up. Railways, there's some hope that it will pick up very soon. So these are the right things to be done. The pace at which it comes in is important, but it's underway. It's underway.
Right.
The point that Arvind made is important, that there are certain sectors that are highly over-levered, that are have stopped
meaning debt,
investing,
just for the-
too much debt,
Yeah.
and because they have enormous debt service problems, they can't attract any new financing, and they can't invest. That's one. But also remember, we've had 2 bad monsoons, and so agricultural demand from the rural areas is also relatively weak.
Yes.
So foreign demand weak, that's what you pointed to earlier.
Right.
Rural demand weak. Investment, at least private investment, still to take off.
Right.
So overall, when companies, even regular companies, not in infrastructure, not in the stuff
Yes.
that benefited from the go-go years, are looking at demand, they say not enough, right? Which is part of the reason we actually cut interest rates as much as we did most recently, when people expected a lower rate cut. But given that, I think there are some signs of things starting to pick up, of demand starting to pick up. Look at the auto sector, 22% growth year on year. So there are some signs that at least urban demand is starting to get more confident, perhaps on the basis of higher incomes, lower outgoes because of fuel and so on.
Isn't that a bit optimistic? I mean,
No. Well,
most
these
industrialists say, man, whatever you're doing, you're not doing it right.
Well,
we're just not.
tell me
and
a
this is off the
situation.
record.
I've been in the finance ministry myself.
When have they ever said you're doing great?
Not so much. I think they're always fairly complimentary. It's more that
No, that's true. They'll be complimentary to you. But what do they say when you're not in the room?
no. They always talk about the difficulty of their situation, of
Yeah,
course.
that's
And I think both of us are very sympathetic to the view that it
Things
is
are
a very
bad,
difficult
very
situation,
bad right
and
now.
coming off a period when they were really growing gangbusters, and suddenly being hit with almost a sudden stop in terms of what
Yes,
they.
yes,
So
yes.
it is a very difficult situation. I think government, RBI, all of us recognize it, but we have to operate within the tools that we have. You can't.
So couldn't the finance ministry or the government do something more?
Yeah, I think.
But how much?
You can't answer that question.
No, I want to.
No, the real question is, in terms of space, monetary and fiscal stimulus, I think we're both doing as much as we can, given the need to maintain macro stability. So what is left is, can we crank up the pace of structural reforms? In the financial sector, we're looking at that. So all these new banks coming up. The Bandhan Bank, for example, is hiring a lot of people. IDFC is hiring a lot of people to do what they're going to do. Right. And similarly, all these new payment banks, small finance banks, they will start hiring. That will help economic growth.
What should they do?
Well, as I said, the public investment that they're trying to crank up
But
is
it's not
coming.
getting cranked up. You
No,
saw
no,
that
no,
decline.
I think that again, if I may say so,
Sensational.
No, it's not. It is. I think. Remember that public investment, not just roads but also railways, is picking up, and both are contributing to. In the first 6 months, we've actually growth has been like 18%. Roads, railways, everything, and we've spent about 53% of our year budget. And remember, this public investment is good for the private sector because it's creating the capacity and the infrastructure that will crowd in private investment. But Pranay, I want to make a larger point. You know, it's a corrective to your unremitting little bit, you know, gloom that you're trying to perpetrate. I think that.
So I'm just reflecting what I hear honestly, and I've heard industrialists all for many years, 20 years. I have really not heard them, and they don't say this to you really because they're a little bit scared.
See,
it is like desperate right now.
No, but I think we need a sense of perspective here. Right. I mean, think about it, right? Despite the fact that the world is, you know, demand is collapsing.
Yes.
Despite the fact that, you know, private investment is like this, we are, you know, growing robustly. You know, think of it, you know, when we grew at 9.5%, 10% in the go-go years, our exports were growing at 30%, right? Despite export growth being 0%, we are doing, you know, 7.5, 8, whatever it is going to be in that 7.5, 8 range. And we are
By
doing
which
that.
series we talk? And
No,
we'll come about that later.
But we'll come to that later. And you have to see this in international perspective. Remember, the world is slowing down. Everyone's slowing down. And in that, we are rightly seen as a haven of macro stability and a real haven of investment opportunity because we represent, you know, one of the...
What you're saying, because that's all very true. We are a haven of macro stability. Thanks to both of you, seen as I think the best thing any government's ever done is to appoint the two of you, and I say that even when you're not in the room. But the issue is, they're also talking about, and they've said it openly, and one or two have said it on camera, even though they're a little scared, about what people loved about India, why they liked it investing, is the stability and the democracy, the tolerance, the acceptance of all different religions, castes, you know, everybody is living together. It's different from the rest of the world. Now they're worried that, and I've heard foreign investors, they come and see us all the time. They're worried about it. What's happening in India? In a sense that the change in the tolerance that India is known for is like, will it affect our economy?
Well, I think sentiment is swayed by iconic acts and actions, and may not reflect the larger reality. So there is a sense in which we have to be careful about what we say, because it does get magnified and reflected all over the world,
including now.
Including now.
Right.
So I think that's important to keep in mind. I think the finance minister has repeatedly said that this is something we should be careful about, and I think that's reasonable advice.
But it's carrying on. I mean, what India is known for, now has suddenly become a country where there's there's lack of tolerance. It's a terrible change, isn't it? And how does it's not stopping.
Well, again, I think the issue is what you do about it.
Right.
And I think the advice from senior members of the government, I'm going to speak for him because he won't, has been calm down. And certainly I think that's appropriate advice, that across the spectrum we should calm down, because I think that reflects, as you said, our history and our legacy of tolerance and openness.
And it was a great positive of India, which would be terrible to lose, right?
I think it continues to be a positive, but we have to, the price of
eternal vigilance is the price.
Eternal vigilance is the price of
civilization.
Is the price of freedom. And I think we just have to be careful that the extremes don't hijack the much more moderate and existing centers.
Now you can speak as though you're not in the room.
Exactly. So I just want to say two things. One of the things that actually the kind of research that both Raghu and I have done, across the world, I think one of the regularities is how countries manage social cleavage and social discontent is a key determinant of long-run development. I think that's a regularity that
key determinant of long-run development.
And I think this is very well understood in government, outside, and I think everyone understands this. It's an essential prerequisite. And that, as Raghu said, the finance minister keeps saying this, that about we have a development agenda, we have to focus on that. Let's not get distracted. I think the second thing I would say, again, something that both of you said, is that these things that we have, the good things that we have, have to, no doubt we can't take them for granted. We have to nurture them, as carefully as possible. But I also think that, one has faith in the essential resilience of what we have, that, this is our strength. We will continue to have it. Yes, we have to work at it, but we'll continue to have it, and and that bodes very well for the medium
But you
term.
condemn what's happening, do you?
I mean, Raghu, I think anything that's extreme or intolerant, no one has struck with, including, people, this government, all governments.
Any questions on the intolerance?
My question is to Dr. Subramaniam. Sir, we recently had a Moody's report which also spoke about this issue. And if we look at a totally utilitarian perspective, regardless of the merits of the case as to whether what is happening is correct or not, it's going to be very difficult for you to be able to pass reforms like land acquisition or GST without being able to negotiate the Rajya Sabha. And this is only going to give the opposition a lot of fodder to disrupt the House. What is the government's strategy to navigate across this perspective? Because I think this is far more important than looking at as to whether whatever happened is true or not. Those investigations can go on. For the economy as a whole, it's very important what the government is planning to how to negotiate the Rajya Sabha in the first place.
That's very practical.
Yeah, it's just that,
I just want to clarify one thing about Moody's. It was Moody's analytical. They have two parts of Moody: Moody analysis and Moody investment reform. That one does the ratings. It's not that criticized. It's the Moody analytics. But I'm sure Moody investment listens to Moody analytics in the long run, or maybe they don't bother.
First, I think what Moody has said is the regularity from all the empirical research. So I think they're just echoing that. I think your question is about political strategy, and I don't do political strategy for anyone. But I think the broader point is that
just a question.
Yeah.
If you think the political strategy was good, you'd say it's okay to do all this?
No, sir.
So you're not saying that?
Because ultimately there's going to be problem from the other side as well. Industries are not going to come into your country
Right.
if you
Yeah,
don't
yeah.
have
Sorry.
that.
And I think
Thanks.
I think, but the broader point is well taken, and it's something that the finance minister has said as well, and something that we need to pass a legislative agenda. We have a agenda, and we need the support of everyone possible to pass that. So anything that needs to be done for that will be tried and attempted and done.
The finance minister is saying it, but is this being said with a loud enough voice? I know you're saying that a lot of people do believe that it's a wrong thing that's happening, but for us in the public, we're not hearing it enough. Do you think it should be louder?
Question to me?
Yes.
No, look, I think that we live in a world of 24/7 press. And so the press picks up some things and the press doesn't pick up other things. I think there's been a fair number of voices recently from government which have been articulating this. But also the Environment Minister talked about having said this way back, but it wasn't picked up. So it's very hard to, pierce
Blame the media.
Well, I don't want to blame the media. I'm just saying that it's not clear when you say, have they said enough?
Is the signal gone out? Like we're talking about signals for industry on various types. Is the signal to stop this intolerance and get back to India's most wonderful characteristic?
I think it's important for all of us to keep saying this. We can't say it enough.
Yeah.
And if we keep saying it and keep the fringes out on every front, I think we will preserve what is vital to preserve in this country. And so I would say, they certainly have said it. I've said it. Others have said it.
Yes.
And we just have to keep saying
And
it.
Arvind
Drown
has said
out
it.
the other voices. Absolutely. Drown out the other voices.
Talked about our growth rate, and it's 7 to 8%. Is that a credible? There is the problem. The world is looking at. Are you really growing at 7 to 8%? The whole world's growing at 2.5%. China's coming down, and frankly, I don't see 7 to 8% when I look around your towns and countryside. Just let's have a look at some of the facts behind the credibility of the new GDP data. First of all, we've got industry at a very slow growth, under 5%. We know also you talked about 2 bad monsoons. Exports are falling. global growth is the weakest, and are we totally out of line since the crisis? We've talked about the bad monsoon. So how in the midst of all this gloom can we claim 7 to 8% growth rate? And the change, and I'm going to give you a real headline, slightly tabloid. We go to the change that basically shook the world and shook a little confidence. Our Central Statistical Organization, a great organization, but when we had by the earlier series a 5% growth rate in 2013-14, then they revised it. And when you revise to 6.9. I mean, you can revise from 5 to 5.2 or 4.8 to 5.3 to 6.9. That's like a 40% change. That's like saying our statistical methods are terrible and there's no real justification. So beyond the marketing advantages of going at 6.9, 7 to 8%, there is a credibility problem with our data. And when are we going to crack that credibility problem? Because we're not doing it. Everybody's talking about these figures are all, I mean, we know China does quite a lot of that, but India?
We take the figures the government gives us.
And then don't believe them.
So having been put on the spot very nicely by my friend, I think that, look, I mean, I think the comparison with China, my view is
their
that
data is better right now.
Yeah,
No,
my view is that the establishment and the institutions we have for measuring GDP, the whole statistical thing, is of impeccable, unimpeachable integrity. Right. Processes are top notch, and in fact, the irony is that all this revision happened in order to get our standards up to world class, and to exploit just a blitz of new information that's become available. Right, and so that was the revision. Now, as I say sometimes that processes can be great, but outcomes we're not always sure about. Right. So I think that my favorite example is, of course, it's politically incorrect. The United States did manage to re-elect Bush. I mean, re-elect him, not the first time, but that's a different story.
And they've got Trump.
Now we know whatever. Yeah, exactly. But I think that therefore, when we assess this data, I think this is a first level of revision. I think in order to get a handle on, whether this makes sense or not, I think they're going to keep working at the data. I think they have to produce a historical series to validate it against
it's like so many years have gone by. You're right. CSO is this Central Statistical Organization, great organization, but always has been great. So 5% was like, okay, not bad. But now it was all wrong.
I mean, as Arvind says, we will know over time what we're missing out or whether we are overestimating. I mean, this is the best we have to work with right now. That said, are we at 2 or 1? No, I think most analysts would say, there's a discrepancy this way, that way of about 1% in terms of growth at this point. And I think some of it has to do with, what we think 7% look like given the old numbers, and what industry feels 7% looks like now. And so it may be that the old numbers were wrong, right? And we were perhaps growing maybe a little better. But let's put all that aside.
All those disaggregated, the industry growth slow, bad monsoons, 2 in a row, low exports, and then 7 to 8%. So that's the
truth is the equation between the new numbers and the old numbers. I think Mr. Pranav Sen has said this also, is not 1-to-1. We're probably, if we were to say what does this mean in terms of the old growth numbers, we'd go down a little bit from where we are. Right. So that I think most statisticians would say. Now, which one is right? As
I know which one you think is right.
No, as Arvind has said, the newer numbers involve better techniques, but in GDP calculations, there's always heroic assumptions that are made.
Right.
And when you students go into the details, the entrails, and this is something that sensible economists should do, go and find out how exactly this stuff is calculated, and you will see there are places where you really don't have any data,
Yes,
and you
yes.
have to make assumptions.
Estimates, I know.
Estimates. So in that sense, there is room for improvement, and over time we will do it.
Yeah. I
Sorry.
just a couple of
Sorry,
things to
please.
add to that.
Raise your hands if you've got any questions. I'll come
See,
to you after this.
In addition to what Raghu said about broadly are we in the ballpark, and there may be plus minus here, which comes with all estimates, by the way, because of all the assumptions you have to make. But I think the one thing that
Sorry,
one
I
should
have to correct you.
Yeah.
Plus minus is normal. There's no plus here. You're not above 8%.
Okay.
It says minus, yeah.
Okay. So maybe it's an asymmetric
Yeah.
confidence band,
Yeah,
as
sorry,
they would
carry on.
say. But I think that what we need to look at is also that, how are things changing over time? And is 14-15 better than 13-14? The data show that. 15-16 is better than 14-15. The data show that. So when we look at numbers, don't just look at the levels, which are subject to risk, but also look at the change. And there I think the data are pointing in the right direction.
I think, bad as you say the industrialists say conditions are, we are a recovering economy.
Yeah.
We are recovering.
Yeah. And probably the last thing is that, again, one number that I look at, I pay a lot of attention to because it's actual dollars and cents or rupees in Naya Paise, but for the government, that indirect tax revenue growth in the first 6 months, it's actual, hard money that the government collects, which it can only collect if underlying activity is doing well. And that number, even if you take away all the new taxes that have been
Yes.
added, that number is growing at a robust about 11.5-12%. And if that number is right, that means the underlying economy is recovering.
But that's nominal,
robust.
right?
Yeah, nominal. But remember, but nominal GDP is we're trying to infer nominal GDP from there, and because inflation is down, that means that a lot of that is real GDP growth.
Right. Inflation down or up, I'm still not 100% sure. The other thing is that a lot of people are talking about, but before I ask that, I interrupted you. I think it's a little bit open. You can ask any question now. You were going to ask a question and I interrupted you. Go ahead.
So it was about the investors' sentiments. So you talked about openness to investments, you talked about Make in India, but there's a lot of pessimism around the world about investing and doing business in India. So I want to know what's the take of our governor on this.
So, key concept in economics and finance is risk and return, right? And people will complain about some difficulties in doing business in India. We all know there's more bureaucracy than probably we need. Government is trying to bring it down, but it is there. But at the same time, if you do erect your factory, you do make a lot of money. A lot of our foreign investors who've put factories into the ground here are very happy with their experience in terms of the profitability over time, right? I mean, look at successes like Maruti Suzuki and Hindustan Lever and so on. So what is key is, yes, it is difficult. It's not Scandinavia. But where can you get 7, 8, 6, whatever, some high number?
Don't go too much below.
No. Where can you get that kind of growth in the world today? So they're really attracted by those things. And once they learn how to put the factory into the ground, this, that, many of them are very happy to expand.
Yeah.
So I think the answer is yes, a little more difficult, but the opportunities are also greater. There is some risk, but there's also a lot of return. And one of the things we have to sell about India is people have in fact made money, even when our growth rates were moderate.
Right.
I would
Probably
say
more than China. A lot of people have lost money in China, but they make money here.
I would say a couple of things. I think that, at this stage, I think on balance, my sense is, and I may be wrong, foreign investors are more, kind of optimistic and gung-ho about India, at least in a relative sense across the world, than most other places. So I think the second thing, I think in all this, and Prannoy, I accuse you of this, is that we forget that there's this whole new part of India, this technology, dynamism, startup, that
Fabulous,
energy
fabulous.
and maybe we're too much, enthralled to the old economy of
Absolutely.
manufacturing
No,
and
it's
this
a
thing.
fantastic.
Yeah.
But again,
And
will we
people-
get an Alibaba over here?
No, but I mean, look, this
300,
is-
what's it, $300 billion?
Look at
company?
Paytm, for example. It's going.
This
Yeah,
is
yeah.
this is so appropriate to India, right? I mean, look at the costs of setting up a huge shop in one of the metros. Enormous today because of land prices,
Right.
etc. But having a warehouse servicing many towns,
E-commerce.
Perfect.
e-commerce, it's the ideal solution. So in a small town, somebody looking at the
Yes.
net at all these goods, and they get access to them today, which they'd never had before.
Now, I'll give you an example of a lady in Surat who, middle-aged lady, designs saris. She used to work for years going to one wholesaler after the other, retailer saying, can you put my sari, put it here. They treat her badly. She was really finding it tough. Nobody can see my sari. She's put it on one of these e-commerce sites. She makes 20 crores a year now
Yeah.
without asking anybody for favors. So it does affect the ordinary person, the entrepreneur.
So I think so. Let's not lose sight of this really dynamic part of India. I mean, I'm not saying that this is the answer to all of India's challenges. I think manufacturing and Make in India, kind of
But this is huge.
have an important role to play. But I think there's also this huge wealth of dynamism, talent,
Yes.
technology exploitation
Yes.
that I think is so. I mean, Raghu and I wrote something long ago called the churn of India. I think this exemplifies
Yes,
the
yes.
the churn of India.
But I hate to say it, even here there are a little bit of the structural problems, the rules, regulations. People, you can't only have a marketplace, you can't have a warehouse, you got to have, oh gosh, that needs to be sorted out. We have to learn from other countries. Just copy.
Well,
or be inspired.
I think both the regulators, the central bank and the government have the ears
Are
open
aware of this.
and are working on this. So,
Okay.
for example, we've spent time with entrepreneurs trying to figure out, okay, what is it that makes you go to Singapore
Right,
and incorporate there as opposed to incorporating here? What are the things we can fix?
Right.
And some of them we can fix directly. Some of them will take a little bit of time because they're tied to everything else.
Right.
But my sense is we are well and truly convinced that we need to make the business environment easier here
Yes.
and have better regulation, not no regulation,
No, of course.
better. What is
Better,
appropriate,
tougher, yes.
lighter but well enforced.
Yes.
Whatever
Well
we have on the
enforced,
books,
correct,
we have to enforce.
Right.
And
Right.
in fact, that was one of our so-called tips was with a company which was violating FEMA rules,
Right.
and in order to give an easier sort of service to the customer. And we said, stop violating the rule. We'll figure out a way either to change the rule or find new ways of meeting the
Making you
rules,
able to do it,
which
yeah.
allow
Yeah,
you to do it.
That's
Yeah.
a wonderful, refreshing way to look at something.
Yeah, I think just to add to that, I would say that regulation, lighter, better, but in all these new swathes of the Indian economy, maybe there's a huge role for government inaction as much as there is for action.
Correct. That's generally true, by the way. Every day, the Parliament, we lose a day of work in Parliament. Many people say it's a gain for the economy, for the country.
No, I didn't
because
mean
less
that way.
government.
But I mean,
You don't say anything. Don't say anything about that. But there is one other issue which a lot of people are raising. There's a saying, if it ain't broke, don't fix it. Now the RBI has worked beautifully for years. You've got a great RBI governor right now. The world admires him. Why do you want to create this, what's it called, PMC, MPC, the Monetary Policy Committee, and start interfering in his work? I mean, it ain't broke.
Actually, let me interrupt there.
No,
I'll interrupt because I actually want
What
the
is that?
MPC.
That's what I was going to say, yeah.
I
Now
want
you're
the
being
MPC.
so politically correct. Even he's laughing.
No,
No, I have been saying this for a long time.
Right.
It's actually something which I think is important to establish the independence of the RBI beyond personalities into sort of the future. And the reason is really threefold. One, when you have a committee, first you get multiple views. So it's not me, it's a bunch of people, all of whom have thought, and you get a collective view. Hopefully the collective view over time will be better than any individual possibly their views could be. Second, of course, if you get the right individual, this is always the problem.
That's the problem.
But
And
that's-
if it's the government appointing 4 out of 7?
The government has always appointed the RBI governor, right?
Right.
Has always appointed the, and you know,
Good choices you must accept.
apart from
Always.
present
Yes,
company
I
accepted.
don't know always, no.
No, present
But
company
certainly not.
expected. It's been a reasonably good set of.
Well, I
This
don't
is
know
the
whether
false
bureaucrats
modesty.
should be made. Bureaucrats should be made given such a important technical post. I
Well,
think they
you-
take 5 years to figure out what it's all
Dr.
about.
Y.V. Reddy was a
No,
great
yeah,
governor, and
there are
and-
of course many.
But anyway, that's besides. The point is that you get multiple views. Second, what you have is 6 people. One goes off. 6, 12, whatever the number is.
Is it 6? I thought it was 7.
Well, whatever the number is, the government
Not
will
allowed to
announce the
say
number.
the number.
It's
It's 6.
no. It's being decided.
It's being discussed.
Yeah.
So let's take
I
let's
thought we were
take.
getting a scoop.
No, you're not getting.
One little scoop.
Let's take whatever number it is.
Okay.
Those people are going to be. One guy gets off. There's still n-1 left, who are going to be the source of continuity. In monetary policy, it's very important you understand what the central bank is up
But
to.
the independence of
No,
the
so
governor
I'm coming
is crucial.
No, I'm coming to the third point.
Right.
Putting pressure on 6 people is much harder than putting pressure on one person. So you just told me the plight of the industrialist. Now I go home and think about it
Right.
and say, no, how do I address this, etc.
But the 5 others may say,
So different people may have different views. So the point I'm trying to make here is that this will actually secure the independence. Now, the point about who appoints, etc., is important
very
for
important,
continuity.
very
And
important.
I think we need to work out, and we have broadly a consensus with the government on how this should go. Of course, this has to go through cabinet and then through legislation, and there could be modifications along the line. But I think there is broad agreement, and the government is very supportive of this process. So, you know,
I just want to say that, from the government's point of view, I think there is no question that, the RBI is one of our, really great and credible institutions. We intend to keep it that way, and anything that we do will be done jointly together, and that's how we're proceeding.
but you will
So
be able to overrule the governor, right?
there's no we. I
if
mean,
you
there'll be a monetary policy committee.
It's church and state. No, it is a worry overall, and because it was functioning so well, and I just feel that the independence of the governor is so crucial.
I think the governor will still be independent, but I believe that if it's structured as we've sort
Planned it
of
now.
broadly
It's revised a bit, is it?
discussed, that it will be an independent entity. And remember, again and again you see people appointed by the government but appointed to an institution. If they are people with integrity, and typically they are, they adopt the interests of the institution because they've been appointed to run that institution according to its objectives. So it's not that there will be a string tying the person who's appointed. I mean, that's true. The deputy governor in charge of monetary policy is appointed by the government. The governor is appointed by the government. But there have been differences between the government and the RBI in
So
the
it's not
past.
just that you were irritated, he wasn't lowering rates and said, now let's put a whole lot of people there.
I think the way to think about this is the following. Frank Fukuyama, the guy who wrote End of History,
yes.
he has a very nice phrase, the China good emperor, bad emperor problem, So when you have individuals, you don't know it's good or bad, right? I think what we're trying to do
When
is...
you have government involved, you know the truth.
No. So what we're trying to do with I think with the RBI is, preserve that good emperor thing, but also try and build an institution so we get the best of an institutional view and an independent governor.
Does it remind you a bit of the judiciary versus the government, where they tried to kind of change the appointment of judges and get interference, and they were struck down? Are they trying to interfere? Are you trying to interfere in the long? I mean, it may be a good government now, good people, and it may work for another 10 years, but then rogue government comes in and then the governor is
No,
hampered.
that's precisely why I think this new structure will be more independent of whatever
The
government
government
is.
does.
Because you can't overnight change the entire structure.
Right.
People will have terms and so on.
Yes.
So there will be continuity in policy,
Very
both when people
reassuring.
leave and when new governments come in.
Right.
So having a target which is sort of which is stable, having a committee which is stable, all these I think are institutionalizing a change which I think was very important for us.
Fine. Last question. You choose.
No, I mean, randomize it.
Randomize. Number 3. You. Did you already ask a question? Okay, you're correct.
Broadly speaking, it is unprecedented that the government and the RBI are working, seem to be so friendly with each other. Now let's take this step a little further. It's not just about monetary policy. There have been previous government committee recommendations, such as the Rangarajan committee, which has actually recommended that the RBI should consult the government on budgetary matters also. Why aren't we seeing more of this synthesis later? Why aren't we seeing a dilution of financial policy, of fiscal policy and monetary policy
Give
in
us
general?
3
It's
things we should
extraordinary.
do
What
in
we're
the
seeing today is
Basically,
truly
you should
extraordinary.
write the budget with him.
So first, I think the differences between the RBI and the government, I hate to say this again, but sometimes are too good press to sort of paper over, and so small differences or genuine differences in opinion are made into a personality clash, into a deeper sort of juicy problem.
Not on NDT. Never.
But we have regular discussions, not just the ones before the monetary policy. We have regular discussions with government at all levels, and I think there is a very cordial understanding, for the most part. And sometimes there are differences. There have to be differences because we are
exactly.
appointed to be
Yeah.
different. Otherwise, it could be run from
Yeah.
North Block.
In fact, that's what I was exactly going to say. I think you should be, of course, you should be very worried if we disagree, on substantive terms. You should perhaps be equally worried if we agree about everything, if we don't disagree about things. And I think that, having that right. And the second thing I would say is that, even what you want, that, just as, we have views on them, they have views on what we do. And, we have a process, we have processes, in fact, where, these get a chance to get, aired, reviewed, discussed, and so on. So I think that that process, and in any case, Raghu has my cell number and I have his.
So I
never
think
pick up.
I think the important thing is government, of course, has the right to replace whoever it wants in any of the institutions that it are with it. But it also continuously says, here is what I think, but the decision is yours, right? So the government can make its views heard, but it's important to let the entity to whom you're
That's the right
speaking
way to do
make the decision. And I think that culture, that tradition, has built up in our country. It's an important tradition, but
And the
again
government
and
has no
again.
intention of changing that at all.
I think we've done our 20 minutes. We run out of time. There's one question which everybody asked me to ask you. One thing you'd like to see in the budget that he should do, and one thing you'd like to see in monetary policy that he should do, and then we'll end. Our 23 minutes will be over.
Oh God. What do I have to think about it.
Let him. You fire first.
I'm, maybe things are too harmonious now that, I can't think of, but I think that this is an institution that, the government values.
One thing we should advise him to do, he may tell you to go jump in the...
Okay, so I think that, and this is not something that Raghu is not doing, and I think that, being watchful over the, the Indian competitiveness of the Indian economy and the exchange rate, which you raised as a concern.
It's a key area he should...
Yeah, that's something that, and it's not that, I think Raghu's,
Yeah.
watching it carefully, but I think that's something that I would pay particular attention to.
Well, this is obviously something the government is trying very hard, and I'm not saying this just because it's already doing it, but I think passing GST would be such a strong signal, not just to the domestic economy, but to the global economy. That we're willing to overcome whatever difficulties, whatever
That
differences
this is way
there are.
beyond politics.
This is beyond politics. This is about stabilizing and ensuring growth going forward.
crucial.
So I think GST,
But they aren't trying that.
whatever form. That's what I said. They're trying hard. But I
Something
think
they're not trying, which they should try.
well, I think this is plenty to do this. If they can do GST,
Yes, it's
I
huge.
think it would send a huge signal. It would also buy us enormous protection against any volatility that comes from the external thing. Because we, as you said, we are passing through difficult times. We are a recovering economy, but times aren't great. To send a signal like this would be fantastic.
Yeah, and I just to add to that, I would just say that, that's a message that's not only true for government, but for all sections and all parties, that, in the spirit of true inclusiveness and putting the national interest above, narrow things.
Yes.
I think that would be a very, I would endorse what he said.
Wonderful to hear the two of you. Thank you very, very much. Thank you. Thank you very much.